This London session was a tricky one, to say at least. I mean, at least sticking to the lower time frames. Lower time frame wise, yeah, rather hard to read. So that's what I did on the 5 minute. Let's see. Right here, these VWAPs, I don't use them, but I just thought it's interesting to look at them with one standard deviation. And I think it's really crazy how, I mean, look at yesterday's London session here. We have that weekly opening VWAP here from Monday or Sunday, according to New York local time. And look how we keep inside of that VWAP during the range. And then finally, right at 8:05, we get that breakout above. We continue holding, continue to break higher. Then we spend the rest of the day inside. And then we spend the rest of the new day inside. And right here at the London Open, where we had this fake out pump, we went above the new day VWAP right here and the weekly one standard deviation VWAP. Just interesting to see. I'm not going to use that, but I'm going to use the VWAPs just as a reference point. The volume weighted average price throughout the entire week right here, starting from Monday. And yeah, the VWAP starting on Tuesday, just for a reference point, really. All right, let's get started with the London session. Really interesting one. So right here, let's get started. That's 2 a.m. Let's skip ahead to 2:30. So at this point in time, we have already cleared the previous day's high right here. We already took that buy side prior to the London Open, which is usually not the best thing to see. So that's our previous day high buy side. We took that liquidity right at 2 a.m. basically. So 2 a.m. candle closed, open with a volume imbalance, and this little volume imbalance held, retested the closing price, and took buy side liquidity. And then right after 2 a.m., still during that macro, we shifted gears and sort of did a small little structure break here. We had this little bearish value gap with us that we could have been looking at, but really between 2 and 3 a.m. you shouldn't be trading that much. And maybe only with micros, also depending on your account size. So let's make these blue. I like blue more than gray. I don't like having gray boxes all over the place. So yeah, we continue, and we also see that we have a 5-minute bullish fair value gap right here, and a 5-minute bullish fair value gap right here. And if we go over to the 15-minute time frame right here, the higher time frame that I use, we can see that this entire area also is a 15-minute bullish fair value gap. Let's plot that to the right, make it a little bit smaller, and go back to the 5-minute time frame. So we have our 15-minute fair value gap right here. By the way, these vertical lines are representing new 4-hour candles basically, so I don't have to remember exactly at what time that happens. And I mean, ICT introduced the concept of macros recently, and if you think about it, the macro originates, where it originates from is that around the new hourly opening, there might be a setup like a little market structure shift or a continuation setup, or yeah, like the market structure shift, a reversal setup forming around the new hourly opening, because a new hourly candle brings in volatility. And if you trade the lower time frames, you can benefit from that volatility. So let's, for example, before we continue here with that replay, look at this 10 p.m. macro right here, because what I'm looking at here is we have that dynamic with the hourly candles bringing in new volatility, but we also have 4-hour candle openings. And that's pretty much where a 1-hour candle opening and a 4-hour candle opening overlaps. So really, to me, that could be the ultimate macro if you think about it. So right here we have 10 p.m. And if we zoom in here and go down to a lower time frame, let me go in back a little bit and check this out on a 1 minute. Let's see what we could be working with here. Really not that much, but still, look at how the algo basically shifted gears from going down. New 4-hour opening, new 1-hour candle. So yeah, like I said, pretty much the ultimate macro when the 1-hour candle opens, and also a new 4-hour candle. And we pretty much shifted gears from here. Pretty tough to get an entry on. The 1 minute time frame is also pretty ugly at that point in time, but still, it's the Asian session, not expecting too much from that. We might see a better setup in the past or in future. But let's continue with the London recap. We have our midnight opening right here. And then, yeah, pretty much prior to 2 a.m. we already had this massive pump. Early in the morning, what I was looking at, but I did not like to participate because it's prior to the London Killzone, we had this bearish fair value gap, which failed to deliver into the Asian sell side liquidity. And we managed to close above that right here at 23.25. So we had a inversion fair value gap right here at 130. We had it paired with a volume imbalance right here, or that kept holding support. And yeah, eventually we used that to pump up into buy side. And if we drop to the 15-minute time frame at the same spot right here where we had the inversion, we also had a tiny little 15-minute bullish fair value gap. And look how well that kept holding support. 15-minute bullish fair value gap, exactly paired with that midnight. Right above we have a new 15-minute bullish fair value gap, but we're going to be looking at the 5. And this is pretty much where the whole drama, for me at least today, originated from. Because if we skip ahead a little bit, we have 2 a.m., a new 4-hour candle opening, brings in volume, takes out the previous day high buy side liquidity, shifts gears, 4 a.m. inside of that power macro basically. But we didn't really continue lower. We tested this bearish fair value gap, but we went back above it. We left behind equal highs. This could have been a nice sign for a potential entry. What I would have liked to see to enter based on that is a close above this bearish fair value gap. If I would have seen a close above that, I would have been, yeah, in that long opportunity. My trade would have looked something like this. Enter right on the inversion, stop loss, 1.5 handles, target. I mean, we already cleared the previous day high, so I wouldn't be inclined to target 5 handles. Just a little 1-to-1 risk-reward ratio trade maybe, trying to target these equal highs. That's exactly what happened, but unfortunately we didn't close above here, so not an entry opportunity for me. Alright, so we continued, cleared that buy side, and that's the short-term high, which led me to believe buy side liquidity taken. We also closed back below this bearish value gap. Didn't really play that much of a role, but we also left behind a new bullish discount right here. And especially once I saw this bearish fair value gap or the bearish volume imbalance, note how we retest the closing price and deliver into that 15-minute fair value gap. And that's where the confusion for me started. It was really 50-50, and I couldn't decide. Because first of all, we had this 15-minute bullish fair value gap. The reason why I thought like, why should we hold that 15 if we already cleared the buy side objective? Good question. So now on the 5, what are we looking at? We're looking at a market structure shift here. We cleared the previous day's high. We have a nice rejection wick. We have a volume imbalance down, followed by another volume imbalance down. We have a inversion fair value gap. We have that market structure shift. Bearish right here. And note we're inside our 5-minute discount right here, paired with the 15-minute bullish fair value gap. We also have a lower discount than that. And yeah, that's the one that kept holding support previously. I'm not going to extend that out for now. Yeah. And that's where the confusion started. So I really wanted to get in, waited for one more candle because that's 255 now. Left behind a new bearish fair value gap right here. And right here. And yeah, once I see a 2022 model, especially paired with the previous day's high, I take it. 100%. There's nothing in my mind because There's nothing I dislike more than spotting a 2022 setup where we break buy side, continue higher, and then shift market structure with a strong misplacement. There's nothing worse, in my opinion, than seeing the opportunity and not entering. What I like to do is enter right here when my fair value gaps overlap and we some sort get a darker shade of blue or gray usually. And yeah, stop loss wouldn't have been too big either. 2.5 handles just to cover some potential wicks. And first pass at the midnight open. Sell side is right here at this low. Right here. And if you look at it, that's really the only short-term low that stands out here. All the other lows are either equal. That might be a short-term low because we have no lower wick to the left and no lower wick to the right, only higher ones. This one stands out. Same for this one. Shifted market structure here, so let's see what happened. We moved inside, so let's paper trade this here. That's pretty much what I did as well. I entered right here at 448 actually, that's where I got my fill, paired with this volume imbalance that remained open. So, in my opinion, a high probability trade. The only issue was that we had the London Open and that could lead to some volatility. And we have that 15-minute discount directly below us. And I shared the 2022 setup and the potential long of the 15-minute as well. So, and that's pretty much the trap of the lower time frame. Because if we look at it, we see for the first 15 minutes, really what we did was consolidate inside of these gaps. We keep holding support on this 5-minute discount paired with the 15. We do leave equal lows behind, which sort of led me to think that, yeah, we might continue lower now. So, and as soon as we would have cleared these equal lows, my plan was to move my stop loss right here to this little short-term high. But let me begin with the plot twist. We keep on holding support. And then right here at 320, we have the invalidation of the setup. I immediately closed out the trade. I think I got out early with a 1.5 or 1.25 handle stop. And something else which is worth to note right here is look how well this volume imbalance right here from 2:55 to 3 a.m. has been respected. We never closed below it. We kept holding support. Then right here, 3:15, 3:20. We open with a new bullish volume imbalance and use that to deliver higher. So now we have the invalidation. Once again, what I was looking for, same way we had it here, the inversion. I also shared the trade idea to handle stop and entry right on this inversion fair value gap, this bearish fair value gap, which didn't hold resistance, to target 5 handles, something around that, with that London Open, because now the 2022 model has been invalidated. I don't have to wait for this high to be broken. It didn't respect the fair value gaps. And that 2022 model, let me say, is also not visible on the 15. Remember that. On the 15, all we have is this bullish 15-minute fair value gap. There's no 2022 model. Maybe a fractal one, but you would really have to be looking very closely to see a 2022 model here, because we have this 15-minute discount. So at this point in time, I flipped my bias over to a bullish bias because we bounced off this 15-minute fair value gap. And if we would have just stuck to the 15-minute chart, we wouldn't even have considered a short. And that's the thing if you stick to the lower time frames. Here, 15-minute entry. I know we have the London Open, but we stick to the higher time frame. We place our stop loss right here, maybe one tick below sell side. So even though we're on the 15-minute chart, just a 3-handle stop loss, which is not the worst. Even if we do a safety stop of 5 handles and we close our trade as soon as we invalidate this 15-minute bullish fair value gap, that is also paired with the midnight. The low of the fair value gap comes with the midnight open. So even another level of support that we have there actually. But of course, you might be asking, this is really 50-50 here. We cleared the previous day's high. We cleared buy side one more time. Why would we, what's there to target really? other than the previous day's high. The next buy side level really comes right here at these two equal highs. So yeah, we could extend all the way up to that. That's why I was pretty conflicted during the London session. So let's see. Our 15-minute setup played beautifully, but I stick to the 5 most of the time. So let's see, we have the inversion, we have no wick to the upside, bullish volume imbalance, all signs for pretty bullish order flow. That's why the 2022 model, in my opinion, was invalidated. And we can see that with directly the next candle, we clear buy side one more time, but unfortunately we do not get back down into our inversions. So right here, noting that we also have a breaker block because we cleared this short-term low and went back above this high breaker block, but we also didn't use that to deliver higher. And here comes the trap, because yeah, we didn't hit a target. Let's see, where's that bullish 5-minute fair value gap that I drew up. Because I had a 5-minute bearish fair value gap on the chart. I think it was this one, the highest one before we reach buy side right here. Let me extend that out. And we also have another one right here, just below that. Because those are really the only reference points that we have until we reach buy side, because this was such a sharp drop. So if we now go to the left, this candle, this bullish candle, never closed above this bearish value gap. Sorry. And note how we open up. We open up with a bearish volume imbalance. But at this point in time, I was looking forward to continue catching a potential continuation setup, because we've been going up. Why shouldn't we continue to go up? But this idea was very quickly invalidated. That next candle already closed below this first bullish fair value gap right here. We closed back below this bearish fair value gap, kept holding resistance perfectly. We even tapped into that upper one right here. Just for reference, I'm going to leave them on there. And then I pretty much got my entry right here with my stop loss one tick below the slow, because really if we want to continue, I really want to see support here. I targeted 5 handles to see if we can continue higher off these 5-minute fair value gaps. But on that very next candle, I was glad I only had a 2.25 handle stop, but I've been stopped out right there. Yeah, and we pretty much continued to clear all the sell side. So all this was essentially was a pump and dump, but really also without giving you a opportunity to enter in the short, because this move was super quick, and that might have something to do with the state of delivery that shifted when they I don't know, ICT mentioned that one day that price or the delivery might speed up into specific sell side targets, and I think we saw a perfect example of that today. I mean, the only good trade would have come off the 15 into buy side, into this bearish fair value gap. Then we reverse. We disrespected this first bullish fair value gap. We closed below it right here. But we are still inside of all these inversions paired with this bullish fair value gap. But yeah, price didn't hesitate. We immediately continued to the downside. No chance to get in on any inversion or whatsoever. So we cleared that sell side. We now have a new market structure. This right here, these two down close candles would become the new breaker block. We have a 15-minute inversion fair value gap. And let's see, here's our weekly VWAP. We have that Asian session sell side. That very next candle, look what it leaves behind, equal lows. This is where the only winning trade for me today came from. I was looking, we're moving up again quickly. Yeah, outside of the Killzone. Gonna check that out at the end of the London session recap. So note, that's the inversion fair value gap that delivered into orders buy side, pretty much pre-London session. We closed below that. We had a new bearish fair value gap paired with it. So really all I was looking for was a quick scalp. Used a free handle stop, I think, to protect me. Midnight level should also hold resistance to simply target this equal low sell side, which played out pretty well because I got filled right here. We left another equal low behind. Tapped my entry one more time. And then we delivered into my target. I took profit right here and another profit at 4 handles with micros only, but that's alright. I mean, I wouldn't like to trade minis after such a massive drop. The trade idea played out perfectly of this inversion fair value gap paired with this bearish fair value gap, cleared that Asian sell side liquidity. And now there's one thing that I want to point out as well. If we go up to the 15, oh no, wrong time, hang on. There was another profitable trade I took today during London session, but not during the silver bullet hour. So no, note, 4 AM, new hourly opening, we pull back, reject off the inversion fair value gap, continue into sell side below that previous hourly low. And this candle, every time I see a candle that clears major sell side with equal lows, Asia session low that has no wick to the upside, has the potential to become an order block. So let's see, this candle immediately shows some bullish momentum. So we tap that sell side, and the following candle, we directly see bullish momentum. On that following candle, we hesitate a little bit, but we managed to close back above our order block. Ideally, what you would like to see is a bullish fair value gap somewhere here now that you could use for a delivery higher, because really we should see support of this little order block right here. We use that to clear the Asian session low. Now a fair value gap would be ideal. We didn't get that, but we got a little volume imbalance, and I entered exactly on that volume imbalance. Now actually on that order block, I thought, okay, we have this volume imbalance, but it's likely going to tap the order block one more time. My stop loss was right here below this low, and my target was the New York midnight level. 3.5 handles for a little pullback. Based on this order block idea, we had the same setup pretty much yesterday during the live stream, where we cleared major sell side, no wick to the upside, but yesterday we actually did have a fair value gap here, if you remember. And yeah, we delivered higher. Sort of had a fractal market structure shift right here. We already cleared this buy side. And on that next candle, I hit my target of that midnight level. These are pretty much just quick scalps based on a little order block, not really a higher time frame setup. The only proper higher time frame setup would have come off here, but not what we did then. We rejected heavily off that midnight level and got really close to our VWAP from the daily open. We are still inside of this inversion fair value gap, and if we now go to the 15, look what we are working with right here. This fair value gap really stands out on the 15. Let me get rid of all this. We already covered that. We do not need that on the chart anymore. So if we stick to the higher time frame, I want to figure out which fair value gaps kept on supporting price to deliver into buy side. For potential inversions that we could use for a new delivery into sell side. So we have these two bullish fair value gaps that kept on holding price and delivered into buy side. Then we had this change of delivery pretty much. We reversed, took the Asian sell side liquidity, leaving us behind with new sell side down below here. We already had our entry of that order block, but now we can see that this might be a good area to potentially hold resistance. We already saw the first rejection. On that next candle, we moved down. Had a little bullish 5-minute fair value gap here. I didn't take this trade, but I watched it. I was content with the drawdown I had. I recovered some bits with this scalp to the midnight level and the scalp into the Asian session low. But really, just a little dent in the overall drawdown. I think I'm back to $100 in drawdown for the day, not on the account. So let's see. We keep on holding support on this bullish fair value gap. But right here at 450, during what time? What's 450? Macro, 450 to 510. The last macro of the London Killzone. We managed to close below this bearish fair value gap. I took a little paper trade or a micro scalp from right here. Stop loss just at midnight. 3 handles is fine. to quickly target sell side. Risk-free handles to make 4. Let's see, because I got tapped. I got spooked a little bit by this move to the upside at 455, but we managed to close below. And we hit the sell side target exactly during that macro of the inversion on our 15-minute inversion fair value gap, paired with that midnight level, paired with the VWAP to deliver into sell side. The entry we used was a inversion fair value gap entry, which we really would have expected to hold support, but we see we negated that very quickly. So place the limit on the inversion, stop at the midnight level, pretty lucky here, to deliver into sell side. Alright, so let's see what we are doing right now. We cleared a short-term low right here. Now obviously we have buys, sorry. Okay, we moved up quite aggressively. Let's see, so we cleared the short-term low. So right here, this would be a YouTube model. We shifted market structure. Let me extend that New York midnight out. So an outlook for maybe the early AM session. But let me get rid of these. So let's check the 15 first, because the 15 is usually, yeah, good time frame to stick to. So we have our New York midnight level now. That's a London session recap. First of all, if you have any questions regarding the London session recap, ask me now. Not important what price is doing right now. We're not inside Killzone, so yeah, we're just gonna take it slow. Not looking forward to take a trade here on stream. But if you have any questions, feel free to ask me now. Let me open the chat on Discord here. Very interesting in validation. It's good to see these two. Yes, the 2022 model is a reference to ICT's 2022 video series, so pretty much what we want to see for that. Pretty simple setup. We have a higher time frame point of interest, which would be the previous day's high right here. And we move through that. Right here, sort of the invalidation because, oh no, that's correct. We put in higher highs and higher lows. We shift market structure. We leave behind discounts, like this bearish 5-minute fair value gap right here, right at the London Open. We pull back into these discounts and deliver into sell side. That's a 2022 model, but what we saw today was a variation of it. Not really a variation, but a invalidation. We pumped one more time back above this, not giving us a chance to jump on the down move, basically, unless you are, I don't know, I like to enter on setups that I can actually define. I don't like a blind entry like, oh, okay, we're dropping hard, okay, I jump in right here. That's not my style. Jumping in somewhere because I think it could continue to a level. Could be profitable if you have a good gut feeling, but this would have been a 2022 model that I wanted to see play out, but unfortunately we had this pump up. But we do not have to wait for the buy side or our stop to be hit. We can pretty much tell by the invalidation on the time frame that we pretty much defined 2022 model from. Right here, 5-minute time frame, we have our 5-minute discount. So if we close above these discounts that we used for an entry, we can safely exit the trade. Maybe 1 out of 10 setups, it might go up and then reverse. So invalidate our fair value gaps and then reverse. But yeah, you could even jump back in on that trade afterwards. Note, here we have a new 4-hourly opening. If we check that 4-hour candle here quickly, note all this 4-hour candle did was a big doji. Pump up, pump down, and we pretty much closed at the exact same closing price that we did right here. So pretty much a whipsaw. We clear the Asian session high, previous day's high, clear the Asian session low. So really we could see the continuation back to the upside. So yeah, right here we had that 2022 model. Let me put that on again. So we slowly moved into buy side. Didn't shift market structure here. We formed equal lows took buy side one more time. Now we shifted market structure, confirmed with a candle close. We went below these lows, left behind discounts. This would have been a 22 model, partial right here on the sell side, second partial maybe here, or right at the Asian session low. So yeah, really that was the setup, and right now in its core we see the same thing here. We drop into a higher time frame point of interest, which would be the Asian session sell side liquidity, all the way from this high. We leave a low, we pull back. This was the short idea that I talked about of the 15-minute inversion. Clear sell side one more time, and now we shifted market structure. We went back above this high. So really what we can be working with now, if we want to see continuation back into buy side. Hang on, let me get rid of these blue boxes for a second. VWAP also isn't too important right now. Get rid of that, leave the weekly VWAP on. So in itself, we have a new 2022 model right here. So now we did identify that on the 5. Let's see on a 15. We could also spot it. But let's go back to the 5 here and look for a breaker block. For the breaker block, we look for the highest up closing candles between this low and this low right here after going back above this high. Let's grab our breaker block box. This would be our breaker block, and look what it's perfectly paired with, that New York midnight level. That's our breaker block. We could redefine it. I mean, really all it is this 4:30 a.m. candle. We could trim it a little bit so it's not that big. The actual highest up closing candle would be this one. So I'd say the more important part is that we have a breaker block paired with the New York midnight level, which could really hold support. But keep in mind, we could also just be filling, or we could have used this 2022 model right here to fill in these discounts that we left behind. So right here, that's a bearish fair value gap on the 5. That's another bearish fair value gap that we just tapped. Let's see. And another bearish fair value gap, a quite big one right here. We did not see a close above it yet. We might get that soon, which could confirm that we could go maybe for these higher discounts. But really, yeah, we could just use this 2022 model here at the low to deliver back into these discounts to eventually deliver lower. I don't know. We will see. We can tell by using fair value gaps. But really, the perfect entry would have come off, let's say, a risky entry with this 2022 model. This is our breaker block. We close above it and we retest it exactly here. And look what we retest as well. The New York midnight level. We also have immediate rebalance. This candle prices down to this candle's high. So we're pricing in this 5-minute candle perfectly. We do not leave behind a discount that we could reference later on. We bounce off the midnight level and continue into almost a 5-handle target. We didn't wait for a retracement. We pretty much would have jumped into that very quickly. Note how we open up here, bullish volume imbalance. So yeah, this would be the London session recap, really. We have our 5-minute bearish fair value gaps. I'm going to mark them up in gray. To the upside, hang on, fair value gap. Quite big one, but that's the only fair value gap that we have before we reach, pretty much a buy side target, really. And yeah, we want to see if we can't use that. It's a little bit too big for my liking, but anyway, I mean, we already tested it and rejected of it immediately. Kept holding this bearish value gap. So really, good question. Let me check the 50% of the current daily range to give some sort of an outlook also for myself. We're already above the 50%. If we would be looking at the ICT fib retracement, we can see that we almost touched the optimum trade entry. We're around the golden pocket area. That's a 61.8. So really, if we think that this is going to stay the high for the day, this buy side right here, that we're not going back above this, that this move back into these discounts is just a move to, yeah, pretty much for price to deliver efficiently. Then we would have our breaker block where? Could someone tell me where our breaker block for this zone in here is? Bearish breaker block. My cursor is already right on it, so I might just do it quickly. That's our breaker block, because right here we have a high, low, higher high, and we went back below that. So we look for the lowest stone closing candles between this high, this low, and this high. High, lower low, higher high, lower low. So this is our breaker block, really. If we go above that, if we manage to close above it, we could be starting to look for longs, but yeah, right now we're in that rollover period. I'd wait for 8 AM before I go back to live streaming likely the AM session, and we will see how that goes really. So I leave that breaker block on the chart. That's our breaker block. Right here we have buy side. Down here we have sell side. We have that midnight open level right here. We have our market structure shift bullish right here. Yeah, so really, how we could tell if we are going to continue to the upside is once again by using fair value gaps. Let's make it blue. I like blue. Get rid of the border. Maybe a bit more opacity. Yep, perfect. That's pretty much the only 5-minute bullish fair value gap that we have left behind. We could check the 15. So on a 15, we have that same breaker block. That's our breaker block on the 15. We pretty much filled our 15-minute bearish fair value gap from here to the tick. Yeah, so really that's the interesting part. If we keep on respecting that 15-minute bearish fair value gap, paired with the breaker block and continue to deliver back into sell side, I'd be more interested to see maybe the New York session lows to be hit later on during this New York session. But yeah, this might really be it. So 5-minute time frame, we have this little bullish fair value gap. We have our breaker block. We have this bearish fair value gap that kept on holding resistance. That's on our chart already. We have a tiny little volume imbalance. There we go. Let's see. We have our bullish breaker block right here, if you remember. So really two conflicting beliefs right here. We have our bullish breaker block for this YouTube model, and we have our bearish breaker block for theoretically this YouTube model, because that's what we did here as well. Cleared higher time frame point of interest, shifted market structure, leaving behind big bearish fair value gaps, fill them to deliver lower into more sell side, which could be these relative equal lows down here, or even the previous day's low and the low of the week. Yeah, pretty tough London session, let's say it like that. The only good setups that I got actually were post 4 AM after we pretty much faked out longs and went to the downside. Right here, this little order block and the rejection of the midnight level. They usually always work. And yeah, right now we're somewhere in between. So let's see what we get until 8 AM. And yeah, do you guys have any more questions? Now would be the best time to ask me. And other than that, buy side, sell side. The only discounts we have is on the 5-minute is this one. Check the 15. On the 15, the only discounts we have is also once again paired with the midnight open right here. So I'd be more focusing on the higher time frame for now. We have our breaker block. We have our 15-minute volume imbalance as well right here. And we have another 15-minute bullish fair value gap. Yeah. And one good advice that I might take myself soon as well is if you struggle with taking too many trades throughout a session, that's very likely because, so let's say your biggest problem is that you see too many opportunities and you enter on them and then you end up in more drawdown that you actually allow yourself to be in. Well, then the issue is likely that you're on a too low time frame and you can't really pick which setup you want to go with. And I think that's one of my issues as well, to be completely transparent. I mean, yeah, this London session here on the 5-minute pretty much gave it away. It's working. I mean, that's how I passed all the recent free Apex accounts to test if fair value gaps hold and use super good risk management basically to cut my risk early and keep losers small, keeping winners big pretty much. And I don't know, so I feel like that as well, because on the 15 the only real setup that we would have seen would have been this bullish fair value gap paired with the midnight level. If this wouldn't have played out during the London session, so entry right here, stop loss, you can use a safety stop of 5 handles, but exit early once we see a invalidation of the setup really. Target 5 handles, or the high of this one right here, 5-handle target would have been hit right here, do a 5-4-5 approach, and done. You already secured your 5 handles on this account. Wait a little to see what London does. If you enter with 2 or 10 micros right here, to pretty much enter with the same size of a mini contract. Let's say you enter with 10 micro lots right here, or micro contracts. You take partials here at the 5-handle target, and then you just see how price is going to continue. You can set another partial maybe at 10 handles. And if it doesn't deliver that, you get stopped out at break even or with some profits to cover commission. Let's say easy trade setup. Then we saw this big down candle. We wouldn't really care about that. I mean, after I would have seen this at 345 on the 15, I would have simply stopped. Maybe the last opportunity that I could have seen on the 15 would be a short right off the midnight open. Once again, use a 5-handle safety stop, target sell side, or just 5 handles, and there we go. Quick little scalp, basically. All right, let's see. We shifted market structure right here. Our 15-minute breaker block, if we would refine it to the highest candle, would be right here. So like I said, we're right in between. We already seem to be disrespecting this bullish fair value gap on the 15. Let's see if we can hold support here. This would really be my level of invalidation. If we manage to close below here, I would look for a sell side. We still have that breaker block that could potentially hold us, but fair value gap wise, I would like to see if we can't hold support. If we do not, then all this was, like I said during the stream, a retest to fill in this huge liquidity void, we can pretty much say. Quick drop, even on a 1 minute. Not that many opportunities to enter on that short, other than a gut feeling that we might take this Asia sell side now. But yeah, if that's my last level of defense, let's check the 10-minute time frame, fair value gap right here, go back to the 5. Also, tiny little 5-minute fair value gap right there, but really, even after disrespecting that midnight level as well, I mean, what most people do likely right now is this. They wait for their optimum trade entry down here, which could work, but it also couldn't work. Like I said, we have a bearish breaker block here, a bullish breaker block here. 50-50. So let's see what we get at the beginning of the AM session right here at 8 AM. If we can get a quick scalp for 5 handles, and otherwise I'd look for entries post 10 AM, which is also a new 4-hourly opening. And like we said at the beginning of the stream, really that's what I would call the super macros, because we don't just get new volume of the 1 hour chart, we get new volume of the 4 hour chart as well, because there are many higher time frame traders who just look at the 4 hour chart, and they are most likely to enter when a 4 hour candle is opening up or closing. That's why we have that 10-minute window prior to the close and prior to the open. That's where I think, in my opinion, that entire macro idea comes from. They're 1 hour chart traders, and they're like, okay, I might get in before the candle is closing, so we have that little 10-minute time window prior to it, 10 minutes after it, to also cover people that might want to jump in after the candle closed on that new 15 or 1 hour candle. Yeah, and really, if we only look at the 4 and 1 hour, because they're overlapping, 6 AM is a new hourly opening, and look what we do right here. 6 AM opens up, we shift state of delivery, continue to pull down. Another example would be right here, bearish, continue up bullish. Let me see if I can find more examples. Yesterday during London, 6 AM, New York local time. 2 AM. Of course, here we pretty much consolidated during this 4 hour candle. Let's see if we can find another example. No, really, I would have to go back further than that. But same thing here, 6 AM. Potentially a change of delivery. Who knows? We will see. Because yeah, really all this 4 hour candle was a doji. So not really telling. We're still inside this 4 hour bearish fair value gap. So that theoretically kept on holding. But yeah, I think a good practice is for all beginning ICT traders to stick to the 15. You won't see as many setups, but if you spot a setup on the 15 and you can find confluence for that, let's say for example on the 1 minute time frame, yeah, this could have been a potential entry right here. We went higher, shifted market structure. Yeah, we didn't leave behind a fair value gap, but still potential opportunity to hunt for some sell side. Let's see. Get back to the 15. Yeah, really, this close is going to be deciding. If we just filled the discounts and we manage to even keep on holding this 15-minute bullish fair value gap, yeah, I could see us maybe continue above this breaker block and maybe even into buy side later on. Alright, I think I'm going to cap it here. Let's see, the stream recording is already 48 minutes long. Not many people are going to watch that on YouTube. It's simply too long. Modern humans don't have a very long span of attention. Thanks to TikTok and all these other social media platforms. They want to see quick. So yeah. Unless there are any other questions, I will end the live stream here. And see you guys again for the AM session live stream. Let's see. Give you guys some time. If not, okay as well. Alright guys, then thanks very much for watching and joining in for this little London session recap and maybe outlook for the AM session. I will edit this and upload it to YouTube quickly, take a little lunch break and be back for New York. Alright guys, take care, enjoy this little break and until later.